welcome to PQ Prime. A very good morning to all the viewers. I am Hiral Dadia. A lot of stock-specific action is what we are seeing on the streets. And joining us to discuss more in terms of stocks which are in focus, we have Mr. G Chokkalingam, founder and MD at Equinomics Research. Mr. Chokkalingam, good morning and welcome to the show.
Good morning.
Mr. Chokkalingam, let's start with ICICI Bank and ICICI Securities. You have the bank which is looking to consider delisting of ICICI Securities, and the modalities of this is slightly different in terms of the swap that will be agreed et al. Firstly, what do you make of this proposal, number one? And secondly, what would you advise investors to do?
First, on ICICI Bank, it's a hold right now. It would have been buy call just because the monsoon has been quite bad, and banking sector, which is rate sensitive, could be affected. So therefore, some clarity emerges on monsoon performance. It's a hold because the banking sector is still continues to grow at the rate of 15% year on year. It's a credit base, which is a 10-year record high, and also the quality of asset in the industry is best in the last 10 years. So therefore, if the monsoon is good, even if it fails, but by small margin, ICICI Bank should do very well. As far as ICICI Securities is concerned, I am little negative because the competition has increased, particularly from the discount brokerage houses, and there will be a lot of pressure. So in terms of ICICI Security, I would suggest India Nippon Life Asset Management. I think the stock price correction as well as the long-term story of AMC business remains very intact. So hence, I would suggest India Nippon Life Asset Management rather than ICICI Securities.
Right. And Mr. Chokkalingam, any more information that you can give us in terms of what it would mean in terms of delisting for ICICI Securities?
Delisting. Yeah, fortunately, I have not seen the offer prices for delisting.
Yeah, I think that all that information in terms of the swap ratio, etc., is still awaited in detail. Okay, so we'll touch base on that, once further information comes in. But apart from that, if you have to look at a Shree Cement, that stock is trading under pressure overall. And yes, there are news reports talking about a tax evasion report. How are you looking at a Shree Cement?
Yeah, as far as tax evasion, we are not sure what would be the implication. But certainly, I would avoid the stock for two reasons. One, Shree Cement valuation is highly stretched, and second, as I mentioned, as of yesterday, also the monsoon performance has been very pathetic. The cumulative rainfall, if you look at, it's a 28% deficit as of yesterday since June 1st. So, secondly, if you look at the 36 meteorological subdivisions, only 13 subdivisions have got a normal or above normal rainfall, which is very critical for cement businesses because the rural housing as well as urban housing, they are all indirectly or directly dependent on monsoon performance. So with a highly stretched valuation, it is better to avoid Shree Cement. In case it falls another 10-15%, then one can consider.
Right. Moving on, if you see in terms of the technology space, you have TCS, which has been in focus as well. And this is on the back of the bribery scandal, which probably, it will not have a financial impact so far, but there is, something that's ongoing in terms of investigations. How are you looking at it?
Could you kindly repeat the name, stock name?
TCS.
CCS.
TCS.
TCS. Yeah. No, certainly, TCS being Tata management, I do not see any scope for governance issue at all. Definitely, there may be some error, but I don't see any serious violation or governance issue. But again, TCS also I would avoid because we all know the European economy got into technical recession with the 2 consecutive quarters of contraction of the GDP, and US growth also has slowed down. And again, despite the growth slowdown, US Fed has talked about 1 or 2 hikes possibilities, rate hike possibilities. So which definitely mean even US growth rate might slow down further. And these 2 regions account for almost 80-90% of the total business for any top IT service player in the country. So which is negative. And also a couple of weeks back, we saw that the large firms, the recruitment of employees at a 2-year low. This is another sign of the problems the top layer of IT services companies are facing now. So therefore, it is better to avoid. Instead, of course, it might look funny for some people. Instead, one can look at Coal India because it is trading at a single digit PE and it is likely to give dividend yield of 8 to 10%. Not only that, if monsoon fails, it will be positive for Coal India because overall hydel power supply would be impacted very badly, and Coal India would be forced to maximize the coal output so that the thermal power can compensate for fall in the idle power. So also the government is after the company in hiking the volume of output year after year. This year also it is expected to be some decent growth in coal mined by the company. So all this augur well for Coal India. So I would suggest Coal India instead of TCS.
Right, so that's a interesting one coming in there. Moving on, drone companies are in action today as well, and this is because the ministry has delicensed exports of drones used for commercial purpose. Yes, the overall impact is something that we have been watching out for, but clearly, if you see in terms of companies like Paras, Zen Technologies, all of these are up and about in trade. What is your view?
I think this is a good time for retail investors to start booking the profits in such counters. Don't rush to book profits in a single day, but you phase out because Indian market last 30 years has seen a lot of thematic play in the small and mid cap. We have seen so many themes playing out: education, aquaculture, etc., etc. But even including the wind energy. But ultimately, what happens? A lot of people jump in and they kill the margin comfort, and it is too early. And if you look at the valuation for a company like Paras and all, it's trading somewhere around 50 PE. So I am not sure, whether these companies would be able to grow the business substantially without compromising on the margin. Because the one good thing about Indian entrepreneur is that many jump in the moment they see an opportunity, whether it is electric vehicle or wind energy or solar. So many things we have seen. So therefore, I would advise caution, and I would give a sell call on these stocks.
Right. So that's with regards to where the drone companies are concerned. Now, SBI cards is another one to look at. Now, in terms of SBI, it's an interesting play because I was just reading a couple of global brokerage houses, Mr. Chokkalingam. You have Nomura, who's gone ahead and lowered the rating and reduced the target price to a 700, from 1,030. Whereas you also have a Morgan Stanley, which is seeing a good potential upside of 30-35% coming in there. From a business perspective, how are you looking at SBI cards? Because clearly, there is an anticipation that there is a possibility that profitability could remain under pressure.
Yes, I agree with you. In fact, we had a buy call and then we closed it recently. Yes, the business per se is maintaining a good growth, but that kind of the growth in the card business is not getting reflected adequately in the bottom line growth. So, and valuation is also slightly stretched now. So, therefore, I would suggest that, since the stock price has recovered from the bottom quite significantly, this is a good opportunity to sell the stock and move on to some other large cap stocks.
Right. So that's with regards to SBI. Coming to HUL, now the key monitorable is how the monsoons are progressing in India, how the rural demand is expected to look like. And that's something which could have a direct impact in terms of HUL. What is your view on a HUL at current levels if you have to look at valuations as well?
Certainly, I agree with you that already there is, slowdown in the rural demand. In fact, last week we saw in the media, Wipro CEO of consumer business saying that rural demand started slowing down. And in this background, if monsoon also fails miserably, then it would definitely get impacted. But however, one positive aspect of HUL is that some of the business verticals are dependent on derivatives of crude oil, and crude oil price is down now 37% on year basis. And I don't see the crude oil rising substantially because of the slowly emerging recession or growth slowdown in the major economies in the world. So to some extent, the input price fall could compensate for any demand growth contraction coming from the rural economy for HUL, and therefore one can hold on to HUL.
Right. So that's with regards to HUL. Now, moving on, Mr. Chokkalingam, two pharma names that are in focus in today's session is Ajanta Pharma as well as IPCA Labs, both on the back of the US FDA inspection. IPCA The stock is under pressure as the USFT has issued Form 483 with 8 observations coming in there for IPCA. And if you look at Ajanta Pharma as well, they've got a clearance for its the H facility after the inspection was done. So both of them moving in opposite directions. But from a fundamental perspective, what's your view and where would your bets be?
Fundamentally, Ajanta is better than IPCA in terms of quality and the business clarity and the plant status. However, unfortunately, both are still trading at around 22p on 1 year forward earning. I think fairly priced in, and maybe for long term one can hold on to Ajanta Pharma, but for any further rise in IPCA one can sell. Apart from the plant issues, I am personally not comfortable, at the timing of this acquisition of Unicom by IPCA because yes, Unicom is a great company, but IPCA, of course, I'm not recommending Unicom at all. We closed the call on Unicom. The point I am saying is that when IPCA is going through a little pressure, the acquisition of Unicom at such a high value could add more pressure to IPCA. So therefore, I would suggest sell on IPCA on any further rise, and Ajanta Pharma one can hold on for a long term.
Right. So that's the view coming in terms of pharma names as well. Thank you, Mr. Chokalingam, so much for joining us on the show and sharing those views. But clearly, markets are below that 18,700 mark. A pretty flattish move is what we are seeing. There is that consolidation that we are seeing. And clearly, as we mentioned this morning as well, it is absolute stock specific action that we have been witnessing so far. In terms of the top gainers as well, you have the likes of Adani Enterprises, Tata Consumers, UPL Cipla, as well as M&M Bharat on the losing end. You have Tata Steel, NTPC, Power Grid, Coal India, as well as Bharti Airtel. In terms of broader markets as well, lots of movers and shakers coming in there. So that's what the markets are looking like. In fact, that's a wrap in terms of trade talks. Lots more lined up on the other side at BQ Prime. Please stay tuned.